Well, thank you so much, Jenna. I love the sound of that. Commissioner Peirce, Pham, and Perianne. We have all the P's, all the women leading in blockchain policy. It feels right. Really excited about today's conversation. I wanted to have you both join us together, and I appreciate you being willing to have the conversation together because the SEC and the CFTC are sister agencies, and when we talk about the policy and the regulation for digital assets, one of the major questions that we continue to grapple with is where's the lines drawn. So it's helpful to have you both be able to talk. We'd love for you guys to be able to host roundtables. Hopefully those will come soon. But just opening up our discussion, and would love both your thoughts on this. But the age-old question is when is a digital asset a security versus when is it a commodity? How are we drawing those lines? How do we navigate that question today?
Today, well, let me start, Perianne, by thanking you and thanking the Digital Chamber and Commissioner Pham. It's great to be here with all of you today. I do have to give you my disclaimer, which I'm sure you've heard before, which is that my views are my own views as a commissioner, not necessarily those of the SEC or my fellow commissioners, and not those of the CFTC either, I guess. So, I mean, the line between what a security is and not a security, that is something that's being basically, the guidelines are coming through enforcement and not through regulation or through sort of, I would say, proactive and positive clarity. So it really doesn't matter what I think about where the line is because the agency is just sort of plowing forward without having any clear lines, and that's just where we are right now. So it's not a happy place to be.
How does it get settled?
And it's really great to be here as well. Thank you, Perianne. Thank you to the Chamber. Thanks to the audience for being here. I'll give my standard disclaimer, which is similar but not the same, which is that I'm speaking today in my official capacity as a commissioner, and the views are only my own and not that of the CFTC or of any other commissioner. I think this is a great question because I think this is the #1 question that I get asked all the time is where is the line between a security or a commodity? And the thing is that it would be helpful if there was a bright line, but the truth is there's so much innovation in financial products, so much innovation with technology that I think it makes sense for a coordinating mechanism, which is what we've basically had informally between the two agencies, or more formally, as in Dodd-Frank, when looking at mixed swaps, for example. So I think it's good if we had some clear guidelines, but then there was a genuine opportunity for the two agencies to work together at the staff level, at the leadership level, and hammer some of these things out. I feel like sometimes back in the day it was easier because you just sat down in a room at a table and hashed it out. And unfortunately, we don't seem to have an official way of working through these issues together like when there was the Joint Advisory Committee between the SEC and the CFTC.
And I mean, to be fair, the SEC and CFTC have not always agreed on many issues because our it's so strange to have these two agencies, strange in the sense that it's atypical, right, for countries to have these two agencies. And so they're naturally going to be places where you say, hey, whose jurisdiction does this fall within? And that is exactly right. We need to have a mechanism to hash those things out.
And in the absence of that, there's been a lot of enforcement. Specifically on the digital asset space. You both have been critical of your respective agencies and each other's agencies of some of the enforcement actions. Commissioner Peirce, we'll start with you, but I brought some numbers. In 2023, just to kind of give everybody a little bit of perspective of what I mean by there's a heavy focus on enforcement of this space, there were 784 enforcement actions out of the SEC in the previous year. 46 of those were against crypto players, so 46 out of 784, and that was up from 50% from the year before. So there is a heavy focus on digital asset enforcement. It's growing. You have been critical of the enforcement actions. Can you shed some lights on your views on the enforcement focus and just what the strategy is from the SEC's perspective, because that's changed as well over the years.
Well, I think that is the question to ask, right? What is the strategy? What are we trying to achieve here? And I think everyone would agree that there are instances of frauds that are just masquerading as something crypto, and those are very much similar to frauds that we've pursued in the past, and everyone would expect us to pursue those kind of frauds. But then there's the question of, if we're trying to get to a better place where people are actually getting the information they need about the crypto assets they're buying, a one-off enforcement strategy probably is not going to be the way to get there. You really, if you do that, you're going to spend hundreds of years, and the cases are going to be very old. So why not take a more proactive approach and think about enforcement not as your primary tool, but just as one of the tools that you have, and it's not the one that you reach for first. And I think that's been the biggest area of disagreement between me and my agency, which is that it seems that instead of having sort of more productive conversations with people in the industry and people who want to use crypto assets, we've just jumped to the enforcement.
Yeah, I think what's happened at the CFTC with our approach to regulation by enforcement is that it's all gone upside down. Enforcement is not a policy-making division. We have 3 policy-making divisions. That's the Division of Market Oversight, the Division of Clearing and Risk, and the Market Participants Division. They're the ones that promulgate and draft the rulemakings that the Commission then votes on, and they're the ones that are responsible for administering and interpreting and applying our rules and regulations. And so when enforcement jumps in front of the line to become a policy-making decision, then we really are backwards. It's not supposed to be that way. And so what I think is striking about the CFTC's approach to enforcement in the digital asset space, and what we've been doing with pushing policy through our enforcement actions, is that we've actually been engaged over the past 2 years in a tremendous expansion of the CFTC's jurisdiction, not only from a product perspective, so perhaps looking to products that are actually, as I've said, securities, and then trying to say that they're not. So this is something where perhaps Chairman Gensler and I agree on some things. But then also expanding the CFTC's jurisdiction from a extraterritorial or cross-border approach. So now, apparently, we are the world's police, and we have been going after non-US legal entities that are transacting with other non-US legal entities. And then we've been bringing all these actions for failure to register as a different, varying different types of registered entities, exchanges, clearinghouses, or intermediaries, or other registrants. And the way that it's supposed to work is it's supposed to be very clear so that you know when you're acting in a capacity that requires registration, so then people can then go and get those registrations. And so I feel like there's this common saying that there should be no surprises, but I feel like with many of our enforcement actions, they're all surprises.
Yeah, just to share some numbers on CFTC enforcement actions. In 2023, there were 94 CFTC enforcement actions, so not quite as busy as the SEC, but 47 of those were against players in the digital asset space. So about half of all enforcement actions coming out of the CFTC last year were focused on this space. And you guys obviously oversee the futures markets, the derivatives markets. These are, I don't know, hundreds of trillions of market cap, and the digital asset space is, I think, like 2 something today. So it's just interesting, right, that there's this huge focus on the digital asset space. You make a very interesting point about the going after non-US entities that are engaging with non-US customers and what that means. There's clearly a very strong focus on enforcement with both agencies in the digital asset space. We have a lack of clarity today. Where is clarity most likely to come from? At this point, you guys have both been working in digital asset regulation for as long as anybody else. Where is this ultimately? Where are we going to get it? Is it Congress, enforcement actions, the courts, something else?
Well, and I want to applaud our enforcement division for their efforts to protect victims from fraud, abuse, and manipulation. But the thing is that although it might be expedient to pursue things in an enforcement action, it actually has repercussions, to your point, over the much broader global derivatives markets that we oversee. So it will have the effect of impacting traditional financial market participants, which I think is really unfortunate. Where do we go from here, and how do we get the clarity? Well, I appreciate all the efforts that the Congress has been doing. There's been some promising movement there that maybe some of these bills will at least move in the House. But at the end of the day, ironically enough, and I've been saying this for the last 2 years, but the courts seem to be moving the fastest here, and that is good that the courts are serving in their capacity as providing checks and balances on the administrative agencies, but at the same time, you then don't develop a uniform precedent that helps to give people clear expectations for compliance. And particularly if we end up with some circuit splits, then what happens? Does it end up having to go to the Supreme Court? That's a process that can take many, many years, and meanwhile the rest of the world has already figured this out and have been putting together holistic and comprehensive digital asset regimes.
Yeah, I mean, I think that's a really good point. And what you said before, Commissioner Pham, about the fact that when you develop policy within the enforcement division, that has real problems because you're not thinking holistically, and that's true even when those cases are not settled, but they go through litigation, because I think people, the judges have to look at the case in front of them, and they're not thinking about these broader questions. And so this is one of the tensions that's always there, right? When you're looking at an enforcement case and you say, okay, well, let's imagine what would happen if we had tried to engage proactively with this set of people. And it's very hard to pull the facts out and think about it that way. And it's certainly not the judge's role to do that. But that's one of the frustrations that I have in watching all of this develop through the courts, is that there's no one who's thinking, let's be pragmatic here and let's think about how we get to where we're trying to go, which I think we can all agree. We want everyone to be able to do things in a compliant way. We want there to be good information flow. So I'm looking too at what Congress is doing, and I'm really grateful that there is interest from Congress in thinking about this, because we're at a point where that would be very helpful to me to have directives from Congress on who they want to be in charge of this and what they want this regime to look like. And it's possible too that we could change, right? Our two agencies could start having roundtables and thinking through these issues together. Is this the round table? Are we having it right now? Yeah, why not start, right? And so I think that is another possibility, and people do change their minds, right? So we have to remain optimistic about that too.
Well, and to a point you have made previously, Commissioner Peirce, is just how things have become more political at the SEC over the years. And speaking from myself and the views of a lot of our members who are watching everything coming out of the SEC extremely closely, that I think a lot of people feel like the agency has lost credibility because of the way they've handled particularly enforcement in the digital asset space. Not asking you to agree with what I'm saying, but thinking about the reputation the SEC currently has, particularly with our industry, how do we rebuild that? How does the SEC rebuild its neutrality to not look like it's involved in a political agenda, and get back to a place of market regulation?
I mean, it's toned from the top, right? I will say that I work with lawyers who are excellent lawyers, and they're taking their direction from what the commission says. This is the structure that we have. It's a commission, and the staff takes their guidance from the commission, so they take their guidance on the kinds of cases we want them to bring and the kind of rules we want them to write. And so ultimately the buck has to stop at the commission. And so that's, I think that's the start to restore. And, there have been issues on the rulemaking side too, right? We're writing a lot of rules really fast, and that sometimes makes it really difficult for us to think through all the consequences of those rules. So I think on across the board, it just takes a change in the tone from the top.
Yeah, and I think that's right. We have kind of like an inside joke at the chamber, which is like maybe our other advocacy message should be like make the SEC non-political again, and just getting back to having commissioners who really are market experts and have experience working in the markets. And I think that could be a good first step, because sometimes the people, not necessarily you,
but I mean,
people
it's
who
true
get
of me
appointed
too.
they don't have any experience in the markets at all.
So you're making a good point, and I sometimes look at myself and I say, why am I in this job as a commissioner? I am a creature of regulation, right? I grew up working at the SEC. Well, I worked at a law firm briefly, but I was doing SEC regulatory stuff. I came to the SEC writing rules for mutual funds. That's about as nerdy regulatory as you can get. Then I go to the Hill, and I'm working again on financial regulatory policy. That's what I did after I left the Hill also. And I look at myself and I say, well, wait a minute, am I the right person to be in a job at a market regulator? I can see your point to say, well, wait, maybe we want people who are more actually in the, they know the markets well. But I think that is what happens when you build an administrative state the way we've built one here. It becomes, the way that the people who end up populating that administrative state are people like me who are regulatory in background. So yeah, I take that point, and I think it should be directed at me as well. But that is the world we're in now, and working within that world, I'm trying to make it as good a regulatory agency as possible, recognizing that we can't regulate in a way that ignores how the markets function, that stepping in front of markets is usually a bad idea. There are times when we do that, but we have to think very carefully before we do that. And we should do a better job drawing talent from the market. People on the staff, we need to draw more people who have deep market expertise. And so I hear that, and I take that point well. Commissioner Pham has spent much of her career working in the private sector, and she does have deep market experience, and I think that's been a real asset for you at the CFTC and for the CFTC as well.
Thank you, Commissioner Peirce. That's really heartwarming to hear, because I do feel that I was chosen for this job because of the experiences and expertise that I have, and I should bring all of that to try to make the markets better, to try to make sure that we are serving the public. And one of the only tools I have is my voice. And so that's why I think it's really important and great for us to be able to have events like this where we can speak about these issues. The credibility of the agency and the reputation of the agency is something I think about all the time, because when issues become politicized, there's a tendency towards short-termism. And you're not thinking about what is the body of regulation that you're creating, and will it stand the test of time? But it's more thinking about maybe scoring political points or accomplishing short-term political policy goals. And that is not good for the markets, because markets crave stability, clear rules of the road, stability. It's not very good business to be a business that is having enforcement actions, or all of a sudden your business model becomes something that's illegal and you have to shut down your business. So we owe it upon ourselves to keep the bigger picture in mind, because I will be a commissioner only for a temporary period of time, and other commissions will come, and we need to make sure that we're leaving the markets and the agency in a better place than where it was when I came into this job.
Well, I definitely appreciate that. And Commissioner Peirce, just to clarify, you have been such an important voice at the commission.
But Perianne, I think you bring up a really good point, and we should be thinking about that with the administrative state, because when you get too disconnected, when it's Washington versus the rest of the country, right? That's really
And it
problematic.
did not used to be like that. It really wasn't that long ago that the commissioners of the agencies were market experts, right?
Although I will say Chair Gensler has quite a bit of experience in the market. So we do have someone at the commission now.
All right.
But I think the point is that Commissioner Pham has really been underscoring recently in some of the statements she's made is institutional design matters, and sticking to good administrative process really matters. None of these jobs is ever about a person. It's about building an agency and an institution that is able to function in a way that adheres to the Constitution and the rest of the laws, and that there's continuity over time, right? And that's what we really need to focus on building, and I think that's why not speaking for you, but I think that's why you hammer so much on process questions, because we can build healthy agencies if we put focus on process.
Yeah, we have the most robust financial markets in the world. We want it to stay that way. We have to innovate. The industry innovates. Regulators have to be a part of that innovation process. And if not, we have a lot. We have a lot to lose. And you guys are incredibly important roles, and the regulators play an absolutely critical function. Commissioner Pham, one of the tools that you do have, in addition to your voice, is you are leading the GMAC, the Global Markets Advisory Council, which I'm proudly serving on as well. You were here last year, and you had just kind of initiated the next term for the GMAC, and you created a digital asset market subcommittee for the first time in the GMAC. So since you were here on this same stage a year ago, give us an update on the work of the GMAC, and particularly the digital asset market subcommittee, and what your goals are for the GMAC this year.
It has been a huge privilege for me to be able to sponsor one of the CFTC's federal advisory committees. And so the Global Markets Advisory Committee is about having a level playing field for global businesses and global markets, and that's across all assets. And one of the newest and most rapidly innovating types of assets are digital assets. So it's been great to stand up that subcommittee. I've been very impressed and proud of the work that the members have put together. Since last year, one of the centerpieces, I think, one of the preeminent accomplishments has been to publish a digital asset taxonomy, because we need to be talking about the same thing when we talk about these issues, and not just here in the United States, but with the rest of the world as well. So what is really impressive to me about the work stream and the work product that the GMAC put out is that it was extensively vetted, not just by the members who represent both traditional financial institutions and firms, both on the sell side and the buy side, exchanges and other financial market infrastructures, but also digital asset natives. And I think that part, and service providers. And so having the consensus of all of these different types of market participants come together and agree, yes, this is how we should be looking and talking about these things, is very hard to do, but it's been a tremendous output. And it was vetted not just by the members, but also by international standard setters and by non-US regulators. So I truly believe that it's a piece of work that can help to create maybe a more sophisticated dialogue in the United States, something that can help to guide the conversations that are happening in Washington, and also provide a path towards international alignment, since the FSB has already put out their crypto asset principles, and IOSCO has also put out their standards, and now they're shifting to a monitoring of implementation stage by each of the jurisdictions that are members of those two organizations. So I think that's very important. And then there's other work, and I really want to thank the Chamber for the Digital Chamber for the work that you've been doing and your leadership on it in looking at NFTs, for example. I mean, NFTs is so interesting to me because here you can have an asset that can be natively digital. And we need to understand what is it and what are we talking about, because these NFTs don't have to be financial instruments. They can be non-financial instruments. And I think that's something I'm looking forward to seeing how the subcommittee explores it.
Well, we are hard at work on getting consensus across all the stakeholders. It is a bit of a process, but we are leading the NFT work stream in the GMAC, and one of the recommendations we're looking to make is that there are many non-fungible tokens that are not financial products, and trying to provide some information around how to decipher that and understand how that will or will not apply, should not apply to financial regulation. Noticing we've got a couple minutes left, and I wanted to make sure we had an opportunity to circle back to developments at the SEC. We had spot Bitcoin ETFs approved earlier this year. It was a 10-year process to get them launched, but we're glad. We've had many of the issuers here today. From both of your perspectives, but maybe we'll start with you, Commissioner Peirce. What kind of observations do you have since these have launched? You have multi-billion dollars of inflows coming into the spot Bitcoin ETFs. And what takeaways do you have since launch?
I mean, the takeaway is don't wait 10 years, right? I mean, this is not a good way to do business, but I think I'm not a proponent of any product, but I think that the inflows reflected that there was pent-up investor demand, and we should have seen before this that people were looking for products that were substitutes for the ETPs that were not in existence yet, and so I think we have to think from an investor protection standpoint that sometimes means not withholding products from people. Again, when we say go to an ETP sponsor, we're not saying we're putting our seal of approval on your product. We're just saying, it's consistent with our rules for you to be offering this, and then let the public make a decision about whether they want to buy it or not.
Yeah, I want to echo a lot of what Commissioner Peirce said just now, but also earlier, because I have been fortunate to have the benefit of your scholarship and your trailblazing in dealing with these regulatory issues and the importance of process, because when I was in the private sector, a lot of the criticisms and confusion was because government is oftentimes a black box. And when we are not transparent about the process or the analysis that we do when we're evaluating new products, it becomes very challenging for anyone to really understand where the lines are, which is why we're all here talking about it today. I do think with these commodity-based ETFs that this should have been a much more straightforward analysis, because we've had commodity-based ETFs since the 90s. And the regulatory framework for them, it shouldn't matter what type of underlying commodity is it. It really should be the same process that's applied consistently to all market participants.
Yeah. Well, I certainly appreciate that. We spent a lot of work with the industry trying to help navigate all of the challenges and how the roadblocks kept being changed and just what it took, and it was quite a feat. We appreciate both of you for the work that you're doing. Mostly appreciative because you've taken the time to understand this developing new technology, understand how it's going to impact the markets, understand how it's going to impact the regulatory requirements of the agencies, and you guys are bringing much intelligence to the regulatory process, and we thank you for your leadership.
Well, thank you, and thanks to all of you.
Thank you.
Thank you.